HBAR just landed on Vanguard's $11 trillion platform. Yeah, you heard that right. 11 trillion. While everyone's glued to Bitcoin charts, Hedera quietly secured an ETF listing that most altcoins can only dream about. But before you rush to buy, the price is sitting on a knife's edge right now. We're talking about 13.8 cents support that could either launch this thing to 18 cents or, send it crashing to 9 cents. Georgia's government is migrating entire registries to Hedera's blockchain. Institutional money is flowing in, but the chart looks like it's about to make a violent move in one direction. So, which way is it going? And more importantly, should you be positioning yourself right now? Stick around, because what I'm about to show you could change how you see this entire setup. Welcome back to the channel. If you're new here, I break down crypto moves before they happen. No fluff, just actionable analysis. Do me a favor, smash that like button right now and subscribe if you want to catch these opportunities early. Notifications on, because HBAR's compression is maxed out and the next move happens fast. Let's get into it. So, here's what just dropped. According to Hedera Foundation's official announcement, the Canary HBAR ETF is now live on Vanguard. Yes, the same Vanguard managing over $11 trillion in assets. This isn't some sketchy exchange listing. This is institutional-grade access to HBAR for both retail and big money players. The expense ratio sits at 0.5%, which is reasonable for a digital asset fund. The SEC approved this thing back on October 31st, 2025, and now it's officially tradable. Now, why does this matter? Because Hedera's been governed by a who's who of enterprise giants: Google, IBM, Boeing, you name it. They've been building enterprise blockchain infrastructure while everyone else was chasing dog coins. And now, with an ETF on one of the world's largest investment platforms, the institutional bridge is complete. $80 million in ETF inflows just hit recently, and that's before most investors even know this thing exists. But here's where it gets spicy. While the fundamentals are screaming bullish, the price action is sitting at 13.2 cents, down 10% from yesterday. Bitcoin's weakness dragged everything down, and HBAR's bleeding with the rest of the market. So we've got a classic clash: fundamentals pointing up, technicals pointing at a critical decision point. Let me break down what's actually happening on the chart, because this is where fortunes get made or lost. According to a well-known HBAR analyst, the token is sitting on a key support zone right now. We're talking 13.8 cents to 14.2 cents. This has been the defense line all week. The chart is compressed like a spring. Buyers keep showing up at this level, but sellers keep pushing lower highs. It's a classic descending triangle formation on the weekly time frame, and those patterns don't stay neutral for long. They resolve violently. Look at what's happening here. The 12 to 14 cent zone has been tested multiple times throughout the year. Every single dip into this region produced wick-heavy candles. That's institutional accumulation in action. But here's the catch. Descending triangles are typically bearish continuation patterns. If that 13.8 cent support breaks with conviction, we could see a flush down to 12.5 cents, then 11.8 cents, and worst case, 9 cents becomes the next macro support. Now before you start panic selling, listen to this. HBAR's trading just below the 100-week moving average at 15.26 cents. This MA has been a pivotal level for past trend reversals. If buyers can reclaim it, that's your first signal that the tide is turning. But if they can't, that's your signal to step aside and wait for lower prices. The chart compression is almost maxed out. Volume's been drying up, which means a breakout or breakdown is imminent. The market's holding its breath, one decisive move, and this thing either rips toward 18 cents or dumps toward 9 cents. And honestly, both scenarios have legitimate technical backing right now. So, what's my take on all this? I'm cautiously optimistic, but only if the technicals cooperate. The fundamentals are undeniable. Hedera is not just another layer one with empty promises. They've got real institutional partnerships. Georgia's government just announced a major plan to migrate its entire public registry system to Hedera's blockchain. We're talking property rights, legal documents, asset registration, all moving to distributed ledger technology. This isn't a pilot program. This is a full-scale overhaul. The Ministry of Justice in Georgia signed a memorandum of understanding with Hedera to modernize the National Agency of Public Registry. So, they're exploring real estate tokenization and smart contract-based property transactions. Georgia's been ahead of the curve since 2016 when they first adopted blockchain for document verification. And now, they're scaling it up with Hedera's infrastructure. That's government-level adoption, something most crypto projects will never achieve. And it's not just Georgia. Last week, Hedera partnered with Axelar, opening access across over 60 blockchains through the Interchain Amplifier. This integration strengthens Hedera's institutional DeFi potential by letting liquidity flow freely across multiple networks. Before that, they partnered with C Sigma, positioning blockchain as a global economic tool for stablecoin holders. So why isn't the price mooning right now? Two reasons. First, Bitcoin's been weak, and altcoins follow Bitcoin's lead whether we like it or not. Second, the market's still skeptical. Retail's been burned too many times by institutional adoption narratives that went nowhere. But here's the difference. Hedera's ETF is live. It's not coming soon. It's tradable right now on an $11 trillion platform. That changes everything. Now, let's talk targets. According to technical analysis, if buyers defend the 13.8 cents to 14.2 cents support and push price back above the 100-week moving average, the first rebound target sits at 15.17 cents. From there, 16.5 cents comes into play. But the real momentum trigger? That's 18 cents. If HBAR breaks above the descending trendline resistance near 19 cents, the entire bearish structure gets invalidated. A weekly close above that trendline with expanding volume could spark a broader trend reversal, and that's when late buyers start FOMOing in. But let's keep it real. The downside risk is just as legitimate. If 13.8 cents fails and we get a weekly close below 12 cents, the descending triangle breaks downward. That exposes HBAR to deeper declines toward 9 cents. And honestly, that wouldn't be surprising. Markets love to flush out weak hands before reversing, and a quick wick to 9 cents could be exactly what's needed to set up the next leg higher. My personal strategy? Well, I'm watching 13.8 cents like a hawk. If it holds with strong volume and we reclaim the 100-week moving average, I'm looking to add. But if it breaks below 12 cents with conviction, I'm waiting for 9 cents to build a position. Either way, I'm not chasing here. The risk-reward is only attractive if you have a clear invalidation level. And here's something most people overlook. Institutional money doesn't move fast. That 80 million in ETF inflows is just the beginning. Once financial advisors start recommending HBAR exposure to clients, once pension funds allocate a small percentage, once the boring money starts flowing in, that's when you see sustained upside. But that takes months, not days. So if you're expecting HBAR to double overnight just because an ETF launched, you're setting yourself up for disappointment. Look, I don't have a crystal ball. Nobody does. But what I do know is that Hedera's building real infrastructure while others are chasing narratives. The ETF on Vanguard is massive. Georgia's public registry overhaul is massive. The partnerships with Axelar and C Sigma are massive. But none of that matters if the chart breaks down and takes out support. So, stay sharp, manage your risk, and don't let FOMO make decisions for you. If you found this analysis helpful, go check out my other videos on altcoin setups. I've got breakdowns on coins that are setting up similarly. Drop a comment below with your HBAR price prediction. Are we bouncing to 18 cents or dropping to 9 cents? I want to hear your take. And again, like and subscribe if you haven't already. It helps more than you know. Let's see how this plays out. I'll keep you updated. Quick reminder, this is not financial advice. Crypto is extremely volatile and risky. Do your own research, never invest more than you can afford to lose, and always have a plan before entering any trade. See you in the next one.